What is up, guys? Welcome back to my channel. I hope you're having an amazing day so far. And if you're new here, my name is Nathan Scott, and my main goal is to help you live life on your terms and not your boss's. In today's video, guys, I have to be honest, I think this is the most excited I've been to talk about different stocks, because today's video is going to combine two things that I'm very passionate about. And it's real estate and stocks. So, if you haven't guessed it yet, today's video is going to be about the best REIT stocks to invest in 2021 for long-term growth. A REIT is a real estate investment trust. So these are just companies that buy income-producing properties and they combine them into one massive portfolio. In order to be considered a REIT, they have to pay out 90% of their profits back to shareholders. So in a way, you can collect some of their cash flow that they get monthly from these properties by purchasing this stock and collecting dividends. Now, two of these companies are well-known REITs, and the others are some that I believe are up and coming and definitely should be looked at by all investors. So without further ado, let's get started with today's video. Psych, go smash the like button. Thank you for smashing that like button. And now I'm gonna get into today's video. Now, first off, I just wanna tell you that I didn't rank any of these stocks. So this is in no specific order. These are just dividend paying or REIT stocks that I'm a huge fan of, and I think they have crazy growth potential in the future. So the first one up is Realty Income. The ticker is O. And the main reason I love this company so much is because they're a dividend aristocrat, which means they consecutively increase their dividends for 25 years or more. In addition to that, they have an annual compound growth rate on their dividend of 4.4%, which is huge. So here is their investor presentation. You can see up here, this is Q1 of 2021. And look right here, 15.2% compound annual total return since '94 on the New York Stock Exchange listing. There were the two things I talked to you about earlier when I said that they consistently increased their dividends, and they were an S&P 500 dividend aristocrat. I know I didn't say it exactly like that, but it's here, you get the point. Also, stability and growth. 24 of 25 years, they have positive earnings on per share growth, and that is awesome. I love seeing that. Now, the next thing I want to show you is how massive a company they actually are. So you can see here their diversified real estate portfolio, 96% of total rent is resilient to economic downturns and or isolated from e-commerce pressures. Now here in just a second, I'm going to show you their actual portfolio. I'm going to show you their top 20 tenants that they have in place. But you can see here the track record of their dividend, 26 consecutive years of rising dividends, which is amazing. 610 monthly dividends declared, 94 consecutive quarterly increases, and S&P 500 Dividend Aristocrat Index member. They're also the 9th largest global REIT. They have 54 assets and 100% occupancy in 5 industries. This is specifically to their UK portfolio. This is overall, but underneath they have a 2.2 billion UK portfolio, 54 assets, 12 years remaining on these lease terms. And this is usually an average number. And they're in 5 different industries in the UK. So now they have 600 clients. This is all within the States right now. They're diversified through 56 industries, and they have companies or tenants in the 50 US states, Puerto Rico, and the United Kingdom. Now this is what they're able to do through the pandemic, which is amazing because a lot of companies got hit super hard. They were not able to show any kind of growth like this. So throughout 2020, they increased their dividend by 3.1%, and they were one of 7 net lease REITs. And you can see right here, same thing. One of 3 net lease REITs with positive earnings growth in 2020, one of 7 S&P 500 REITs, and one of 3 retail REITs. Next, guys, I want you to see their portfolio. Now, you can see here, convenience stores takes up most of their industry diversification at 12%. And I'm not gonna go super in depth to their financials. They've looked great to me, but if you wanna look at the financials, you can go to the presentation or investor presentation, just type it in on Google and it'll show it all, it'll all pop right up. But mainly what I want you to see here is just look at these household names that they bring to the table. I mean, okay, so Dollar General doesn't sound like a household name, but if you've ever lived in a small town or been around a small town, I swear it seems like every 2 miles these things just keep popping up. They're everywhere, and they've grown so much over the last couple of years. So I want you to look at LA Fitness, AMC, and Lifetime Fitness. So out of the top 20 clients, these 3 right here that make up roughly 7.5% or a little bit more than that of their portfolio, all 3 of these companies shut down in 2020 and did not pay rent whatsoever for months at a time. And even through that, O still managed to raise their dividend. So this company is just very well diversified. So what I wanted you to see right here too is here are like 2 or 3 more companies that you didn't see on that other chart that aren't necessarily top 20, but they're still huge tenants for Realty Income to have. Lowe's, Tractor Supply, Home Depot, Advanced Auto Parts, O'Reilly Auto Parts. I mean, these are all huge companies that are name brand or household name brands. The BBB weighted average credit rating you see right here, these are all rated BBB minus or better. 60% of the top 50 clients have an investment grade credit rating, which just means that when they have this kind of credit rating, they're much more capable of meeting their financial requirements. Last thing I want to show you with Realty Income is the portfolio occupancy. You can see here, in addition to the track record of consistent shareholder returns, they have maintained strong year-end portfolio occupancy, which has never been below 96%, which is awesome because that's unheard of. It's very, very good to have a 96% occupancy rate. Most of the time with these things, it's kind of closer to around vacancy rate, at least, is closer to like 10%, and they're holding it like 4%, so that's pretty good. So the last thing I'm going to show you in each one of these stocks is what their current share price is. You can see with Realty Income right now it is $69.60, and they pay an annual dividend of $2.82, or basically $2.82 and a half. They have a dividend yield of less than 5%, coming in at 4.1. I love seeing dividend yields at less than 5%, mainly because it tells me that the dividend is pretty sustainable. So you can see they pay monthly. You can see right here on the payment date, every single month they pay out. They pay 23.5 cents per share. And that is it for Realty Income. So the next one I'm going to talk about here is Stag Industrial, and the ticker is STAG. And this is another one of those up and coming REITs that I believe, if you're interested in REITs as an investor, that you should definitely take a look into. There's a huge tenant with this company that I don't hear a lot of people talking about, which really kind of blows me away. So real quick, I want to show you what they were able to do in 2020. This is their acquisition activity. They invested $776 million. They acquired 9.9 million square feet and an additional 48 buildings to their portfolio. You can see here since 2011, they've just been steadily increasing what they're acquiring. Another thing you can do with Stag Industrial is you can look at their property portfolio. You can do the same thing here. You can click on these states. Blue is where they have properties at, and they are only in the United States. They're not international company, at least not yet. You can see here, these are distribution warehouses. So this is what this company does. They just buy a ton of warehouses and they rent them out to massive companies that need them. And this is what's going to help them fend off e-commerce competition, because they're literally just, I mean, if you can't beat them, join them, right? So what they're doing here is they're buying all these warehouses. You can see here, 176,000 square foot warehouse in South Carolina, 558,000 square foot warehouse in Lebanon, Indiana. And this is what they do. They just acquire these massive warehouses and they give them out to massive companies that need them. Now here's my favorite part about Stag Industrial. So Amazon, right? We all know that it's a massive e-commerce business that is just taking the world by storm pretty much. But Stag has actually partnered with them. Check this out. These properties are recession proof and, more importantly, Amazon proof. Amazon is Stag's largest single tenant, accounting for about 4% of its portfolio, and approximately 40% of the portfolio handles e-commerce activity. So Stag is embracing the future with its portfolio positions. And that is huge for them, because this just opens up a lot more Amazon and Stag Industrial partnerships down the line, because Amazon's not going to stop growing anytime soon. Another awesome thing about Stag is its dividend. So you see here, its current price, the stock yields 4.2% and has raised its payout every year since 2011. Stag pays its dividend monthly rather than quarterly, and that is exactly how Realty Income does it as well. Realty Income is also a monthly dividend paying stock. So last thing with Stag here is their dividend history and current share price. You can see is $40.17. They pay an annual dividend of $1.45 per share. Dividend yield is 3.68. Once again, well below that 5% mark that I consistently look for. And you can see right here, they pay monthly and they pay 12 cents a share every single month. This next one, I'm not really sure how it gets much more recession resistant than this, or recession proof, if you will. So this next one is Easterly Government Properties. The ticker is DEA, which is funny, and you're gonna find out why in just a second. So let's show you guys real quick what they're all about. This is a company that is striving to be the partner of choice for the US government. And this is one of those up and coming stocks that I don't really hear people talking about, but I came across and I looked into it, and wow, it blew me away, to be honest with you. So check this out. They focus primarily on the acquisition, development, and management of Class A commercial properties. What Class A commercial properties are is just like pretty much the high end of the high end commercial properties. They're super nice, and they do this primarily for government agencies, which is amazing. So check this out in their properties. You can go here, you can see where they have all their different properties at. Tennessee, they have an FBI building in Knoxville. You can click on it, you can see the picture. I think there's only 2 pictures of this one. Yeah. DEA owns Class A quality properties for tenancies for the federal government. And check this out right here. This is what makes them so much better to me, as if they're not already pretty nice. Easterly Government Properties is a landlord to the largest employer in the world, as well as the largest office tenant in the United States, and that entity is the U.S. government. And another neat little fun fact right here. In fact, DEA is the second largest landlord to federally leased real estate in the country at 3.7% market share. So DEA's portfolio, this is what their target market is. Single tenant federal government office buildings around 40,000 square feet or larger. There are around 500 of these properties across the country and 50 properties that are leased to the Veterans Affairs. And this REIT, DEA, personally owns 79 properties across the country, primarily concentrated in the Northeast and Washington, D.C. and California. You can see right here, this is their regions. But let's take note of this. 79 properties out of the 500 that actually exist. DEA almost has 20% of the total properties that they can actually target this market with. If you're wondering why I said this is the most recession resistant or recession proof stock that I've come across, or I don't know how it gets much more recession proof than this is why right here. As of March 31st, 2021, the company wholly owned 82 operating properties in the United States, encompassing approximately 7.5 million leased square feet, including 80 operating properties that were leased primarily to the U.S. government tenant agencies and 2 operating properties that were entirely leased to private tenants. So that other one was a little bit outdated. They now own 82 properties rather than 79, and 80 of these 82 properties are leased to the U.S. government. So if another pandemic hit, guess who's still getting their money? So lastly, same thing here, Easterly Government Properties now still $21.85 roughly. I bought in a couple weeks ago around 23, so it has dropped a little bit. Annual dividend of $1.04 and a dividend yield of 4.8%, which is still below that 5% range that I consistently try to look for. Easterly Government Properties does pay quarterly. You can see right here, 12, 3, and 5, and they pay 26 cents a share. So they're still, I mean, that's pretty good compared to their share price of $21.85. So this next one is probably the most well-known REIT out there. I'd be surprised if people that have been investing for a little bit, or at least looking into REITs for a little bit, haven't come across it. And it's a dividend king, which is amazing because it is the only REIT that is a dividend king. And there's only 30 to 35 companies that are considered dividend kings at any given time. So Federal Realty Investment Trust, ticker is FRT. So here we go. Federal Realty Income, this is their actual page. Just kind of want to show you a little bit of what they're about. So they say that their mission is to deliver long-term sustainable growth through investing in communities where retail demand exceeds supply. Here you can see that their markets, they have 100 plus properties, approximately 2,900 tenants, 24 million square feet, and approximately 2,800 residential units. This right here, approximately 2,900 tenants, this is referring to their commercial properties that they own. So they have actual major businesses. They have around 2,900 of those. These are their 8 major markets right here. You can see primarily on the East Coast, but Silicon Valley and Los Angeles as well. Now this is the most impressive portion of FRT. 53 consecutive years of increased dividends. And you can see here they started as far back as 1967. And check out all these crazy things that happened along the way. Inflation hits 40-year low of 1.1%. Inflation, oh wow, look at that, 1980. Inflation in the U.S. hits 14.8%. And this was the meltdown of 2008 when the real estate market collapsed, and they still consistently increased their dividend. They're now paying $4.24 per year per share. That's their annual dividend. So real quick, I want to take you to their investor presentation. This is an older one, but I want you to check this out. This is how they get their success so well. So their population that they look for is around 160,000 people. They have a strong, very strong household income, $120,000 a year. So they try not to, well, not try, they don't invest in communities that aren't making a substantial amount or very good amount of money per year. This is their diversification. So no single retail category is greater than 9%, and the other represents 18 additional categories. I mean, these are some absolute giant names that everyone's heard of at some point in time. So this company is very set for the future. Very well diversified through all kinds of different industries. or 2,900 total tenants and 105 properties. Yeah, so this is what I was saying earlier, 2,900 total tenants. This is the actual businesses that they rent out to. So now I want to show you their 2021 acquisitions overview, and this has a lot of good information on it. First slide I want to show you right here, and guys, FRT is just very well diversified. They have a very strict set of clients that they look to, that they try to tailor to, and honestly, it's high-end people. And they've been very successful with this, and I don't see any reason why this would stop in the future. Last thing I want to show you with FRT, same thing. So here's a share price of $117.27, annual dividend of $4.24 per share, dividend yield of 3.58%, well below the 5% range. And they pay quarterly as well. They pay $1.06 every quarter for each share that you own. And I will be diversifying my portfolio heavy into REITs this upcoming couple months. I'm going to be restructuring everything, and REITs will be a major part of my portfolio, mainly because they're so inflation resistant. All right, guys, well, that is the end of today's video. I hope you found this information as helpful as I did. I didn't really cover financials that much because I just wanted you guys to see the biggest reasons that I believe these companies are going to be successful, and primarily it's because of their tenants. A lot of these companies are setting themselves up in ways that will be very, very beneficial to them in the future. So yeah, these are my thoughts on these companies, and I hope you enjoyed the video. Be sure to hit the like button if you haven't done it already. Be sure to subscribe down below. If you have some REITs that you're interested in, I love doing research into these things. So if there's something that you've come across that you think is a pretty good REIT, be sure to drop it in the comments below. I'll definitely look into them. So that is it. I'm gonna leave a link in the description below for Robinhood. So if you get started investing today, you and I could both get a stock potentially valued up to $500. So why would you not try it? Because if you didn't like the stock that they gave you, you could just sell it for $500 or whatever it is and put it into something else. Maybe even one of these REITs if you want to. Be sure to like and subscribe, guys. I appreciate it. I will see you guys next time. Thank you for watching. Enjoy the rest of your day.